Hello, my YouTube friends. Well, consumer price index came in as expected. Markets roar higher, which is kind of interesting. We're going to talk about the CPI report, what I see in that, as well as a few stocks and why I try to buy what I consider the best of the best. So stick around. Good morning. Probably afternoon by the time this actually gets uploaded and everything else, but it is morning currently. I hope you're all well. My name is Adam Kahn, and this is Investing with Adam K. Also, I think of myself still as the rational investor. Today is Wednesday, May 15th. Every time I say the date, I can't believe how fast the year is going. Today we had the CPI report that pretty much came out as expected. One or two items were a little bit soft. It sent the equities as well as the bond market roaring higher, which pushed interest rates lower. 10 years actually below 4.4% in yield. Last I looked, it was like, I want to say 4.35, which is nice to see and kind of goes along with the way I've been thinking that the Fed's really going to try to get at least one, if not two, cuts in before the end of the year. Um, I think they do have some concern with unemployment more than anything else. And I was pretty surprised yesterday to see after the PPI or Producer Price Index, when it came in hotter than expected, for the markets to actually rally off of that news. It tells me that people are probably still underinvested despite what seems to be the rhetoric coming from the news media and some of the gloom and doomers on there. I think what we really had is a lot of people rush into high yield savings accounts as well as short term CDs. And as they sit in there and watch equities go higher and higher, eventually they're going to get frustrated seeing the better yield, or better returns, not yield, in the equities and the other markets than in their, 4.5%, 5% 6 month to 2 year CDs. Now, I could be wrong with that, and I'm guessing I'm not because, we all have egos and think what we think. But I kind of think over time, if the equities continue higher, that eventually we'll see that money siphon out of those things and push back into the equities. And odds are they'll be doing that at the wrong time. It just seems to be the way that money flows. Now, what throws me off in terms of how the markets reacted is even with CPI coming in as expected, it wasn't like it came in lower than expected, driving that message of inflation slowing down. Now, to be fair, 3.4 for the CPI is a really reasonable place for it to be. I think, quite honestly, anything below, and I'll just make a number up the same way the Fed makes up their 2% target, but anything below 3.8 to me seems really reasonable. That I think the long-term average is right around a 3.5% inflation. And when I grew up, my parents always talked about inflation running around 4%, which is also why I say, like, what I see going on in the world right now just reminds me of what life was. I think we were really fortunate from 2015 to 2019 to see things evolve the way they did. Prices of everything were really inexpensive, and you were able to make a good living. So I don't see that always being the case. And what can happen is what did. Eventually, that gets to a point that it drives too much demand because people have too much to be able to spend. Right now, that they're a little bit stretched is probably more normal, or what I would think is more normal. You're always going to have people who overextend, and you're always going to have people who spend too much. They talk about I think it's $1.3 trillion in credit card debts, and that it's higher than it's ever been. Where people seem to miss the boat on this is, of course, it's higher than it's ever been. Every time we go to the grocery store, we all complain about inflation and that things cost more than they used to. Well, if you used to charge $50 a week on your credit card, and there's now been this inflation and it's $100 a week, well, the credit card debt is going to be higher, even if you're paying off of your credit card, because they don't really talk about that. It's not necessarily revolving debt, it's just how much debt there is on the credit cards, which, as things cost more money, well, there's going to be higher charges on a credit card. Totally logical. The other thing is, it's very hard to predict or time markets. That's why I really just try to stick with the best companies, period, when I'm looking at buying equities. So I have three different stock accounts that I've talked about, the three main ones that I've talked about on the channel before. I have one account that is the majority of the finances that I put into an account that I never really look at. I think of it as in a safe deposit box. I can't trade it online. I have to make a phone call to the advisor, who's my brother, who knows that the rules are if I call you wanting to sell anything, you pretty much fire me as a client. Now, that's an exaggeration, but it really is supposed to be I want to own these companies and I don't want to make any changes unless there's a real fundamental change in my opinion about the companies. And I try to stick with what's the best of the best. I actually reevaluated it not that long ago and consolidated into the companies I think are the best of the best. The reason I did that is I don't want to pay attention to valuation and I don't want to think I'm right about something that maybe I'm not. And I'm going to use Apple as an example because I had actually sold Apple and I had sold it what I thought was pretty well because the stock had fallen from the time I had sold it because I think Apple is extremely overvalued. I still think Apple is extremely overvalued. It's growing at 4% and it's trading at over 30 times earnings. So it's got a 30 something PE growing at a rate of 4%. Now, the good things about Apple is they're extremely flush with cash. They have good income coming in, so they're really not going to go out of business unless something changes. But I think that's an extremely overpriced company, which is why I had sold it. When I reevaluated, what I reminded myself, and partially because of these videos that I do, is you don't want to worry about that. You just want to own the best companies. So I ended up buying Apple back in the account. All it's done is go straight back up. And I'm floored because I still think it's overvalued. But at this point, I'm really not thinking about it or paying attention. And I feel the same way about Costco. And if you pay attention to all of that and try to get out of things that you think are overvalued and buy things that you just think are cheap that you don't think are great companies, I find cheap things can continue to get cheap. Now, I know I've done a lot of videos when I think things are on sale, and I think buying great companies when they're on sale is awesome. But just buying something you're unfamiliar with because it looks cheap when you really don't know anything about it is probably a major mistake. On the flip side, if it's a great company, even if you overpay, odds are if it goes through a rough period, you'll be able to sit through that storm and last as long as you need to until things work themselves out. I even had to remind myself about Starbucks. Look, I am super negative on Starbucks. I was really bummed about the earnings and the CEO, man, the answers he gave were so awful. He gave no confidence to any future of what he has in store to actually grow the company. The comments about that occasional user not seeing their whatever he called it, I always remember and then I forget their value proposition. Like, come on, what a cop out. What a terrible answer. And implying that, like, they're not seeing the value of Starbucks and that's why we're slow. And then pointing to the other things just seemed like a bunch of excuses. But I do think Starbucks is a great brand with a great reputation that has a good customer base that really probably isn't going anywhere. Maybe some have decided to boycott or whatever they do, but people forget about that in time and they tend to go back to it. Look at what happened with Chipotle. So I reminded myself that with Starbucks, even when the stock fell, and I went in and I bought a few more shares. Wasn't thrilled about it because, like I said, I really didn't like the earnings. I think he should have warned ahead of time. I think they should actually have a plan on what they're going to do to grow business. You know, I felt like I came up with a good plan, yeah, an ego type of thing. I haven't figured out why Starbucks hasn't implemented some of those boba drinks and the boba teas that are really popular with kids. They get a premium price, which matches their structure. I don't think it would be a great idea to start selling the Monsters or the Rock Stars or the Red Bulls because that's a different type of caffeine fix. Because, Starbucks feel is coffee house, sit down, relax, use their Wi Fi, maybe have a meeting there. Well, this younger generation really likes those boba drinks, and I think that fits that same motif. There's no reason you can't order a 7, 8, $9 boba drink and maybe even a coffee version and sit at Starbucks. And I don't know any company that has really taken that portion of the drink business and turned it into a big company that you see store after store after store. I'm sure there's some chains that have a few of them, but I don't think there's anything out there like Starbucks. And I think what they could really do is do some sort of test case in certain areas to see if it works. Anyway, that's just my thought on a way to grow business and try to get market share back, because I do think they're getting some competition. But some of the competition, like even McDonald's, it's not like their coffee drinks are that cheap. And Starbucks has always been a brand that has been considered expensive in terms of their price. I know that the media pointed to maybe they need to lower their price because with inflation, people are cutting back. But I think that hurts their image. I don't think that's a great way to go. So I don't disagree with the company or the CEO in terms of that aspect. In fact, I thought their direction of actually offering discounts through the app was kind of stupid, because that isn't what they are. They aren't a discounted brand. And as somebody who owned a restaurant for a while, I understand that if you become the place that discounts, you change your image and you're now a discounted company. If you want to really get your value, whatever you called it, through to the consumer, you have to have a value there and be okay with what you charge because you serve a premium product. So make the best boba drink so that people start gravitating there and it starts driving new business. Don't worry about the stuff that you're losing on the sides. Focus on your core competency and be the best at it. Anyway, I've rambled at Starbucks enough. But if you want to know the companies I have in the safe deposit box off the top of my head, it's, Meta, Amazon, Google, Microsoft. Um, I actually have Intuitive Surgical in there because I think they're the best in their space. And then I have Exxon and Chevron, and there's a few others that I'm not remembering right now. Oh, and Palo Alto Networks. But that's really what I focus on, and I try to put a majority of funds in the companies I think they're best, and hope that over 10, 20 years they continue to outperform. I don't worry about owning um, what's Palantir, for example. Palantir might be the next greatest thing, and I won't be a part of owning it. There's a few reasons for that. One, maybe they're not the next greatest thing, and I don't want to take that type of risk for my type of investments. Two, even if they are the next greatest thing, how long will it take for that to actually happen? And I might just be sitting there waiting and waiting and waiting until it finally shows in the stock price and performance. And three, even if it does happen, what percentage of my portfolio am I going to put in something that's that big of a risk? So either I'm just going to put a little bit in, so even if it happens, sure, it's nice to look at and good for bragging rights when I hang out with my friends. But if I put an amount of money that I really cared about, since I don't know enough about the company, if it started going higher and higher and higher, my guess is that I start slowly siphoning off some of that position because it would become too large a position. Great problem to have, but I'd start getting uncomfortable with it. If that happens in Amazon, and I'm not predicting this, and like always, before I go even further, this is not financial advice. Please don't use any of the information I'm sharing to make decisions in your accounts or your portfolios. Reach out to a financial advisor. I'm just a guy on YouTube sharing what works for me. Now, back to my Amazon comment. If for some weird reason Amazon 10x's over the next couple of years, I still love Amazon. It's not going to change my comfort level. And if it becomes too large of a position in my portfolio, great. I'm not going to lose sleep over that. I'll still see them as a great company. And if they've gone up 10 times over the next 2 years, I'm guessing there's a reason for that that I'll probably understand. And again, I'd be okay. I would just have a really, really, really large position in Amazon, but comfortable with them. And that's the case for all the stocks that I have in that portfolio. I was really fortunate with Meta that when it fell a couple years back, I picked some up. It's done extremely well. I don't really think about it. And the other thing I do is I don't pare things down when that happens because my hope is that it really outperforms and does turn into such a large position in my portfolio that it puts me what I would consider over the top. I tend not to slowly siphon out of positions because I don't want to get out of the ones that have a chance of really running for a long time. I mean, look at what Apple did for years and years and years. Look at what Microsoft did for years and years and years. Once some Tesla, once some of these things start running like that, it's sometimes difficult to let the position just run. That's why I consider that a safe deposit account. I then have a smaller account that's dedicated to dividends, which I did a video on, and I think some of you saw, that I try to press for higher yields. I like that account too because I actually use those dividends. I'll take them and I'll use them to spend for whether it's a mortgage payment, car payment, or if we're going on a vacation, which I'm hoping to do this summer. I do press the yields a bit. I actually had somebody call me a bozo for one of the ones I picked, which I find kind of humorous because it's done extremely well. And I understand that sometimes I don't get into the financials, but so everybody understands, I do look at all that stuff. I also listen in to the quarterly calls that they make online. I listen to the question and answers from the people who work for the funds who question the CEO and the answers they give. It's not like I simply just don't pay attention and I buy things blindly, but I also think there's some value in just buying the best companies and sticking with it. The one he called me a bozo for, to be perfectly honest, I read up a ton on that company because it had fallen from $80 to 21, which made me concerned. But when I read what was going on, yeah, I didn't see any major problems. I saw the street as overreacting to actually what wasn't such terrible news and pushing the company to give such a high yield that it made it super attractive, and they even had announced that they were going to continue to raise that dividend, which they have done. I then, on top of it, actually called the company, or I reached out to them through email. They set up a FaceTime so that I could sit and talk to them through what's it called, the whatever that company is that all of us use to chat and be able to see each other. Um, but so they set up a time and a place to do a phone call where they talked to me about the earnings and everything else. I was floored that they even responded, let alone set up that conversation and let me ask questions about what's going on with the company and should I be concerned. Now, at this point, the price has gone up enough that I don't know that I would be diving in here. But really, when it fell to where it did, it was paying like a 16% return. And the news was they had to lower their guidance on how quickly they thought they could raise the dividends from there. Well, if a company is giving a 16% dividend and the bad news is about the speed that they're going to be able to continue to raise the dividends, that doesn't sound so terrible. And when I've read all the reports, called the company, followed up, and I check in on it, I'm not super uncomfortable making too large a bet on it. And with my trading background, sometimes I make too large a bet on things that I really believe in. Anyway, so the I have the dividend account. I do press for higher yields in there. So some of the stocks I know they're not going to have a whole lot of growth potential. I also always try to find those things discounted. I think that energy had gotten a little bit discounted for a while, so some of that's in there as well. And then I have a much smaller account that I use for trading. My background is I traded on the floor of the Chicago Mercantile Exchange where I traded yen futures. I still haven't gotten that out of my blood, but I also know that I tend to do better, and the account that I tend to do the best in is the one that's in the safe deposit box. But since I can't get that out of my blood, I do have an account that I day trade, that I'll buy a stock, hold it for a few weeks. I often sell puts to get into things, and I do sell calls against things to try to collect premium. And I think that's a great way to get additional revenue or income for people who are disciplined. Maybe if people are interested, I'll do a video on how to make money using options, because especially selling puts, as long as you have the money to be able to take the stock if you get exercised on them, generally you're getting a nice premium to sell puts on companies. And I think there's really good money in that. And I do that very consistently. Now, the account's so small, it's more just for fun than anything else. And I'm not too worried which way it goes, one way or another, or anything else. But that's the one portion of the trading portfolio that I've actually thought about increasing the size myself as well, because I see some real value in selling puts. Again, really not financial advice. I see a lot of videos on this stuff where they make it sound way too easy, and you better have enough money to cover it if you get exercise. Those of you who don't understand or don't do that, let's pretend a stock is trading at $110 a share. We will call it stock widget because I am totally making up the stock. If you wanted to buy stock widget at $100 and you were thinking about putting a bid in and just leaving it there, the other way you can do it is by selling a $100 put. It has a time where it expires, and if the stock is trading below $100 at expiration, you automatically get assigned. Now, in some ways, the risk is that it dips below $100 and then goes right back up, and you never get assigned, and you would have gotten filled if you just put the order in. But in the meantime, if the stock doesn't go lower and never gets there, you get to keep the money that you got from selling the put. And generally, it's kind of like insurance. The people who sell generally end up being the ones that are profitable. Most of the people buying options are gamblers, and they're hoping that a stock gets to here or there or wherever it is, and they pay a certain amount of money betting that they think it'll get to that price in whatever timeline. And usually, the people who sell it are the ones who do well. No guarantee. And that's why I say I watch lots of these videos of people making it sound like it's free money. I promise if there was free money out there, people would be taking it. It is not free money. And then, real quick on the housing market, which I know not a lot of people you really pay attention to it. Um, at least here in Vegas, the market is still busy. There's tons of demand. And as I'm watching the 10-year bond continue lower and interest rate, well, not it go higher and rates go lower, I'm sure that the mortgage rates are getting better. If that continues, like the sales pitch of what people were saying, if rates go lower, it's hard for me to imagine anything but prices going higher. We have so much growth out here, and real estate's very localized. We have so many people coming from California because to them our prices look cheap, and there's so little inventory. It just seems natural that the prices are going to go higher. And part of why I say you don't try to time it, I've been watching these gloom and doomers talk about the housing collapse for the past 4 years. And look, I'm not telling you to buy a house. I'm not telling you it's going higher. I'm sharing my opinion. I don't know. Maybe a collapse is coming. But what I will say is if you listen to them and you haven't bought a house for the past 3 or 4 years because that collapse is coming, well, you missed your opportunity for rates in the threes, if not lower. And you've lost, I don't know, maybe 50% equity growth in the properties as well. Inflation goes through everything. It's not just eggs. If there's inflation in eggs and groceries, there's inflation in the cost of a house. They go up lock and bar like together. It doesn't make sense to people because they think a house is so expensive. Why would it go up the same as eggs? Don't know how to answer that, but inflation is inflation and it does. So if it continues, so will that. And listening to those people predicting the crash, I don't see how that's not considered libelous because they've talked a zillion people out of buying properties while properties have continued higher and their interest rates have gotten worse. So please make your own decisions. Don't let the noise in the background make you decide not to do this or to do this. You just have to go about your lives, work your jobs, save your money, put away for the future, and not be scared of the sky falling. Well, have a great rest of your day. I rambled enough. I hope you're all well, and hopefully I have time to get this posted and talk to you again tomorrow. Don't forget, if you haven't already, make sure to hit that subscribe button. Also, smash the like button. I can't tell you how much that helps the channel. It's been super cool. We're actually over 20,000 subscribers today, and I like so cool. Thank you all. I really appreciate that. And make comments too. Let me know what you think. I do my best to answer everybody. Have a great day.